Namaskar and good morning. Today we will look at Infosys Limited Q4 results and FY19 results both. As we saw in the TCS results, the two results are reasonably good, and of course, of them, TCS was much better than Infosys. We will take a look at Infosys now, but Infosys is also improving. Infosys net sales are 21,539 crores. 21,539 crores compared to 21,400 crores in the previous quarter and 18,083 crores in the quarter of last year. So year on year, the increase is 19.1%, but quarter on quarter there is no increase. It is almost flat, 0.65%. So year on year increase is 19.1%, which is quite good. Now let us see the net profits. Net profit is 4,074 crores compared to 3,609 crores in the previous quarter and 3,690 crores in the quarter of the last year. So the increase, if you say, is 10.4% year on year and 12.9% quarter on quarter. So Infosys net sales are up by 19.1% year on year. Net profit is up by 10.4% year on year. Equity is 2,170 crores, up from 1,088 crores. Year on year increase is 99.5%, which is due to a bonus issue. Now the equity stands at 2,170 crores. The basic EPS is 9.37 against 8.3 in the previous quarter and 16.98 on the lower equity. So on the higher equity, you can say it is something like 8.49. Now basic EPS is 9.37, previous quarter 8.3, and last year same quarter is 16.98, which works out to 8.49 on the pre-bonus equity. The market price is 748 and price earning is 19.96, which is not too much for a company like Infosys. Volumes are quite good, so you can buy and sell Infosys stock very easily. 52-week low is 550, 52-week high is 774, face value is 5 rupees. Now the year on year increase is hardly about 29%. So you can't classify. Of course, last year was a bad year for all companies, 2018. Therefore, we cannot say much about that. But anyway, the price increase was there, 29%. Now, the CMD, Salil Parekh, he says, we have completed the first year of our transformation journey with strong results on multiple dimensions, including revenue growth, performance of our digital portfolio, large deal wins, and client metrics. So this is the first year of our transformation journey. That is, after Salil Parekh has taken over, the transformation has started. That's what he means, it seems. This is a reflection of our increased client relevance stemming from our focus on digital positioning and long-standing client relationships, says Salil Parekh. Our planned investments have started yielding benefits. As we look ahead into fiscal 2020, we plan to deploy various measures of operational efficiencies across the business. So Infosys Q4 results are good. Sales have increased, net profits have increased year on year, and they have bet the last state estimates, various estimates of various brokers, etc. but it's not as good as that of TCS. Now let us see the revenues. The total revenues have risen by, we have seen, by 0.65% on quarter basis to 21,539 crores from 21,400 crores. Quarter on quarter basis there is no increase. Year on year basis there is increase of 19.1%. Net profit is 4,074 crores and it is up 13% quarter on quarter and 10.4% year on year. Now, if you look at the dividend history, for FY19, a final dividend of 10.5 rupees has been declared. A special dividend of rupees 4 was declared on January 11th, 2019 and paid on January 28th. An interim dividend of rupees 7 was declared on October 16th. Normally, this interim dividend and final dividend are taken as the dividends. The special dividend is excluded from the calculation of the dividends. For FY18 also similarly, they had declared a special dividend of rupees 5, a bonus issue, etc. So, the dividend history is quite good for Infosys, and there was also a bonus issue in the very previous year. The Infosys and TCS both are good paymasters, especially in rewarding the investors. So that is an attraction for investors. You not only get capital appreciation, you also get dividends, bonus, special dividends, etc. Now, last year, a new Chief Financial Officer, Nilanjan Roy, was appointed with effect from March 1st, 2019. So, there is a brand new board. Salil Parekh is the CEO and MD. UB Praveen Rao is the Chief Operating Officer and whole-time Director. Nandan Nilekani is the Non-Executive Chairman. Nilanjan Roy is the Chief Financial Officer. Overall, the top management is an illustrious management. The other directors are also very famous people. The dollar revenue for the quarter stood at $3,060 million, growing 2.44% sequentially against $2,987 million and 9.1% on year-on-year basis against $2,805 million. Dollar revenue has also improved, but in India, what we are normally worried about is the increase in the rupee terms. Now, the guidance for the next year, FY20 revenue guidance is in the range of 7.5% to 9.5% in constant currency. FY20 operating margin guidance is in the range of 21% to 23%. Infosys issues such revenue guidance. It makes its own calculations. It gives a heartening picture. It's not too low, but it's not high. The guidance is a little low only, on the lower side only, 7.5% to 9.5% improvement is expected. But as the year rolls on, you can't say. They may have more wins of projects, and the revenue guidance may increase also. This is the minimum that we can expect. That is it. Then Infosys had initiated a buyback of shares. See, after issuing the bonus shares, the shares naturally increased by 2 times, 100%. So, to bring it back to old levels, some buyback of shares also is initiated by companies like Infosys and TCS. Now, out of the total buyback size of 8,260 crores, the company has bought back shares worth 1,546 crores so far. They will be extinguished. So the planned buyback is 8,260 crores. So far, 1,546 crores only has been bought back. Now, Infosys margins have narrowed down to 21.4% from 22.6% in the same quarter as last year, down 120 base points. On the operational front, Infosys operating profit came in at 4,618 crores compared to 4,830 crores last year, down 4.4%. So, operating profit is a little down. Deal wins. So Infosys has won a large number of large sized deals. The large deal signings is somewhere around 1.57 billion in the March quarter, taking the overall large deal wins to 6.28 billion for the financial year. We have completed the first year of our transformation with strong results, says Salil Parekh. Business segments. Now, the financial services segment fell 0.8% in constant currency growth and 0.4% in reported terms. Retail segment has registered 0.9% fall in constant currency terms and 0.8% in reported terms quarter on quarter. Life sciences also has registered a small in constant currency terms. Now, this is where TCS scores. In constant currency terms also it has grown. In reported terms also it has grown, TCS. Infosys reported terms there is some growth, but constant currency terms there is a degrowth. Some small acquisitions are there. Hitachi Procurement Service Company Limited has been procured at 206 crores, something like that. Stater NV, a company has been 75% stake has been acquired, some 700 crores, something like that. Now, if you look at human resources, the total employees are 2,28,123 as at 31st March 2019, 2,28,123 against 2,25,501 in December 18 quarter and 2,04,107 in March 18 quarter. See, what is worrying for Infosys is the attrition rate, 20.4% annual consolidated. The net addition during the quarter is 2,622. So, what is going for Infosys? The large deal wins is a heartening feature. But Infosys is not taking any fresh breakthroughs, fresh products. It is only concentrating on winning more and more deals from others, but it is not probably making any new products. The same weakness is there for TCS also. Now, I feel that Indian software moguls must start making great products like Microsoft does, Google does, etc. That one angle is a great weakness for Indian software. They are satisfied with what they are getting as large deals. So, all over the world, large deal wins are reserved for Indian software companies. But in my opinion, this should change. They should make great products, and those products should sell all over the world, like Microsoft Windows, Google, etc. So, we have seen TCS, we have seen Infosys, both are good investments, long-term investments, but neither of them can be classified as a multi-bagger. They are winning large deals in very good number, which is a positive point for both. They are recruiting people. TCS is recruiting more people in accordance with the number of deals that they are winning. And whether Infosys will run faster than TCS in future, we'll have to wait and see. There is a newfound enthusiasm in the board with Salil Parekh, Praveen Rao, etc., etc. So many good people are there. So let us see whether there will be a directional change. They are updating themselves with the latest software developments. That is all okay. But can they make great softwares by themselves? Say artificial intelligence is there in that field. Can they make a great software? I don't know whether they are planning any such thing. They are intent on winning large deals, small deals, etc. But whether they are willing to make great products which will sell all over the world, that is wait and see. Some time ago, I think 3-4 years ago, Narendra Modi had said, why can't our people make an Indian Google, an Indian Facebook? Things like that. You must be able to rival the best in the world. Let us see what the future unfolds for the Indian software sector. Thank you for listening. I will be back with you with another great company.